Welcome back, Dividend investors. Today we're going to take a closer look at Broadcom, stock ticker AVGO, currently trading at $871. Over the last year, they are up 70%. The year to date, up around 57%, following the same trend. Looking at the last months, ever since they released the earnings report back in late August, they took quite a beating and has traded roughly sideways ever since. And it wasn't even a bad earnings report at all. They actually beat both on the top and the bottom line, but the AI-powered rally that Broadcom had seen didn't really follow through in the earnings report. But if we look at our stock screener, we do see a lot of healthy metrics for Broadcom. You can see here the PE 9/4 ratio sits around 19, which according to this is a bit lower than the 5-year average, but I still feel that this is maybe a tad too high and actually feel that AVGO could be potentially a bit overvalued at the current price. Earnings per share sits pretty good at $32. 52-week high, you can see here, the current price is relatively close to the 52-week high, where the 52-week low is way below the current price. The net debt to ESA is pretty good, sits way below the 3x ratio I would like it to be at. Return on invested capital, return on equity as well sits as extremely nice figures, and all the margins over here are looking really good. You can also see it actually has operating margin growth over the last 5 years, annual 10% increase in the margin, which is extremely crazy to see, as well as the dividend. And if we jump into here, you can see a little more dividend stats. The dividend yield sits around 2.11. Annual payout is $18, and the payout ratio is way below the 60% I would like it to be at. The dividend has been grown over the last 12 years, and if you look at this, you can actually see quite a nice trend in the dividend growth from Broadcom. And you can also see they have paid out the same amount the last 4 times, so they are probably due for an increase for the next dividend. Before we jump into and try to calculate the intrinsic value, I just want to take a closer look a little bit fastly at the financial statements. You can see here the revenue is growing massively, around 20 billion last year, up to around 5 years ago, up to around 35 billion now. And if you come down here to the net income, you can see that it's also growing quite a lot. Really high number back here, but that was due to a very low expenses, for example, for R&D. And as you can see here, if you start at these numbers instead, 2.7, 2.9, you can see they have actually increased it quite a lot to $13.9 billion. But obviously we want to take a close look at the free cash flow as well, since it's what's paying the dividend. So if you come down here in the cash flow statement, you can see cash from operations. They are increasing that quite heavily. You can see around 9 billion now, back 5 years ago, up to around 18 billion now. But look at this. This is what I really want to see. Capital expenditures, really low, under $500 million, and they sit it at an extremely steady pace. You can see here 432, 463, 443, 42, and so on. It's really low capital expenditures for Broadcom. And if you come down here to the bottom, you can see the free cash flow per share. As mentioned earlier, the dividend per share was $18. You can see here it sits really nicely. They are increasing the free cash flow, so there's plenty of room to grow the dividend as well. And one last thing is that the analyst do actually has it as a buy. You can see here a lot of analysts has it as a strong buy. Coming down here to the price target, you can see they actually have a price target of $945. Could indicate an 8.5% upside from the current level. We also obviously want to calculate intrinsic value ourselves, and to do that we do have a lot of different valuation models. As you can see here, you can stop anytime if you want to go through them one by one. But before we jump into the summary, thank you so much for watching. If you haven't done so already, please subscribe to the channel and like the video. Let's jump into the summary, where we can see here we do have the dividend discount sits at negative due to the dividend growth being so much higher than the weighted average cost of capital. So let's exclude that one. We also do have our margin of safety calculator over here on the right. And since Broadcom has so nice metrics that I use to calculate the margin of safety, you can see that the margin of safety actually becomes negative. This means that, as mentioned below here, the margin of safety below 0 could warrant a premium, meaning that such a well-run company, we kind of want to be okay paying a little bit of a premium. So if we put -5 over here, we actually raise the acceptable buy price a little bit. But as you can see here, the average intrinsic sits around 734, and the current price being 871 could indicate an average current discount of -18. But being the margin of safety a little bit low, we actually could be okay paying a little bit more, but still the acceptable buy price sits around 771. So it would need a little bit of a pullback for me to actually go into the stock. We didn't touch this one, so let's jump back a little bit into our dividend data. And you can see here the dividend growth rates over the last 10 years is 35%. But if we take a closer look at some of the individual values, you can actually see here, for example, back in 2017, the dividend was grown by 90%. Obviously, a lot of these old, very high growth numbers kind of obfuscate the growth in the future. So what we actually want to take a closer look at is the 3 and 5 year growth rate, which is probably a bit more reliable for gauging how the future growth will be. So you can see the last growth was 8%, roughly 9%, but still it sits around 11 to 18%. So I would expect it would be in this area where we be going forward. We also want to come down here to dividend yield theory graphs, where you can actually see that the current yield sits way below what the 5 year average is. So at least according to the dividend yield theory, there isn't really a discount now. And I also think the PE ratio shows this as well. Combining this with all of these different valuation models, even though the analyst target price sits higher than the current levels, I do think it is overvalued at the current time. I do think it's a stellar business. And if AI really takes tracks, it could obviously launch Broadcom even higher. But at the current time, I'm not really sure I would buy into the stock. At least I would wait for a little bit of a pullback. And if you take a look back here over the last year, you can see it has really traded around 600, and then suddenly ever since June, it was skyrocketed into these 870 to 900 area. So there's plenty of room for it to drop back down. If you zoom out even more, you can actually see that it has been trading around these 600 down to 400 for quite some time, even before the current levels. So I would probably, if everything goes according to plan, wait for at least 20% pullback or something like that before buying into Broadcom. But obviously, do your own due diligence and then make an informed decision. Thank you so much for watching, and I'll be seeing you in the next video.